Welcome back to the Do More podcast. I'm with Annabelle and Chuang. We run a podcast on money, not just on money, but also mindset and meaning, because there's a lot bigger dimension between what we do. Now, this is the segment where we have a lot of reflection. I think we talk freely about,
Yeah.
and also about the people around us as well,
Mm-hmm.
the kind of challenges people, our peer groups are facing. And maybe we can also try and solve these issues together, right? With this podcast, and you can tell us what you think in the comments below, and so on. So maybe Annabelle, you tell us what you think about. I mean, the people in your peer group, right? The kind of challenges that they're facing.
Well, women in their, I would say, 35 onwards, we start to have all these biological changes, whether you call it perimenopause or menopause, 35 to 55. And some of them have done their corporate stints. They've done a lot of their work, years and years of doing the same thing. And they start to think, is there more meaning in life? Am I supposed to do this forever? Or is there something else I can do? And they start to realize that maybe the time is now and I can't wait until I'm 60 or retired to just start something new. Many of them that I've met, and there's several women, they literally left their jobs and they just wanted to take that mini retirement. It's not because they have tons and tons of money. It's not that. They still have their commitments. They have their kids. The kids haven't graduated, but they decided to take that pause because they know they can't do it and wait for too long. And so some of them have this money put aside and they would like the money to work for them. Maybe now that they've taken a step back, there's time to relook at what to do and to learn something new, to know where to put the money, somewhere safe, not too risky, but then good returns. And they want that money to work for them while they're figuring out, okay, what's next for me? Is it a consultancy? Is it open my small business? Is it go back to the workforce, but maybe do something else that interests them and not their old, let's say, boring, more than a decade type of job? So I've met so many of them, and especially women in their 40s. So they've already established, they already know what they know. They want to do what's next. And so they all want to know where should they put their money. And they are like me. We are tech savvy. We know the news. I would say we're well informed about the world, but we haven't put enough understanding on how to make the money work for you much more. So that's something I really would love to learn from you, and I'm learning every single day. And I think we are living in the era of convenience because now it's made easier. Back then, you probably would tell me to go open an account somewhere, sign a lot of forms and open a trade and to buy stocks. But today, it's made so much easier. So these are the things that I'm hearing from other women. And the first time I've heard of eToro was from a friend of mine, and the other one like Stash Away from another friend. So all these things coming together, this is hopefully the place that we can look into it and share our real insights so that women, especially women of my age out there, can learn how they can do this on their own, whether they've quit their jobs or still continuing on or looking for that next chapter. They're in between things. Hopefully, this is something that we could cover here at Do More to help them with that next journey.
Yeah. So to be sure, I'm not a financial advisor. I'm just a normal guy. Been working, all his life, but in financial markets as a journalist. And some of this information that I've got is basically gleaned from talking to people, very successful people, over many years, right? And meeting people in the investment world and making a lot of mistakes myself, and I've talked to this many times, right? And over time, you kind of like try and hope to make fewer and fewer mistakes. So then you get to a certain age where you get to a point where you kind of generally know what to do. And then you generally know that you kind of make more good decisions than bad decisions. So I would say that for the cohort of people that you're referring to, they're actually quite fortunate because a lot of people, they don't get to leave their jobs. And there's so many financial pressures on people, right? But the fact that they've got a bit of savings, they've got the autonomy to leave their jobs, and then to have the freedom to decide what's next for them, it's in itself it's a luxury. So let's be very clear about that, because for many people that's not a reality, And then from then onwards, right? Again, even if you talk to a financial advisor, they've got to get into the weeds of where these people are. in the totality of their assets, what kind of commitments they have, what kind of plans they have for the future, even for their children, how much traveling they want to do. And then to really get into this, because there is no one size fits all. Everybody's financial plan is very specific to each individual. And your financial plan can evolve from today. In 3 months' time, your financial plan will be different again. That's why I've never liked financial advisors, because they can they can never really know the full extent of your financial position. And because your financial position is so dynamic, right? It is literally so dynamic that it can go to the positive and it can go to the negative. For example, if a member of the family fell sick, then that contingency emergency fund that spending has to come in, right? Or it could get to the positive, right? For example, you might get a windfall from a family member. That those two events, one is good, one is bad, will skew the whole financial scenario very, very differently, right? And it's dynamic. So that's why first of all, I've never liked financial advisors. Second of all, I've always liked to have agency, independence over one's financial position. And then to constantly look at it on a daily basis. How do I need to spend? What is coming down the pipe? What are things I want to do? And then to allocate accordingly. And then risk profiles change from time to time, age to age,
I know that there's no one size fits all, definitely, but maybe as a general thing that we need to have covered, that probably would be something that is very good advice to people out there that's 35 to 55. What would you say that these are the bare basics? Make sure you got this covered, and doesn't matter what age, with which financial position you are. Do you have kids or you don't have kids? What are the bare basic that we have to have covered?
Okay, so it's like a company, right? You've got your income and then you've got your expenses. If you're going to be going from a position of having an income to no income, right? And then you've got to capital manage. You manage your money. What I would say, first of all, is that you've got to cut as many expenses as you can. So the biggest expense you have is your credit card. Your credit card is charging you 18% a year on outstanding balances. That's the first one you're going to cut, right? And so if you have that ability, it's the opportunity cost of capital, right? If you're able to get a better return than 18% a year on your savings, then maybe you don't pay down your credit card. But if you cannot do that, then take the chunk of money. If you owe 30,000 on the credit card, just pay the damn thing down, so you don't have to pay any interest on that outstanding amount, and then you save yourself 18% a year. But if you can get 18% a year or better, then deploy that capital over there. But there's very few things in this world that can give you 18%.
No.
Seriously, without a whole bunch of risk.
Yeah.
Okay? So that's the first thing. The second thing is look at the lifestyle, right? Are you used to buying artisanal coffee, going for matcha tea, having yoga sessions and paying a lot of subscriptions? Well, then maybe you can cut some of those subscriptions, right? So it's first of all cutting your costs. And then once you cut your costs, you don't need that much money to survive. Okay. And then you look at the top line. The top line is your income, right? So if you have a sum of money, then you're looking to get a yield on that money, right?
Yes.
And so the benchmark yield is somewhere around about 4%. Fixed deposit is about 3.5%, 4%.
Yes.
EPM is around about 5.5%. And so if you have $1 million, let's just say, right? Very few people have $1 million, but let's just say if you have $1 million, that's about 55,000 ringgit a year in income. So that's about 4,000 ringgit a month salary, right? So you just take that $1 million. You can't put the whole sum into your EPF, you can't, right? But you can get maybe 5% yield on some other instruments, right?
Like what instrument?
Okay, so the thing is, you might want to buy a low-cost index fund. A low-cost index fund is like an ETF, for example, right? And you can buy them from people like BlackRock or Fidelity. And you can buy index funds on any benchmark index in the world, whether it's the S&P 500 or whether it's the NASDAQ or whether it's, whether it's gold or whether it's Bitcoin or whatever, right? And then you might get the return, right? And then that's how you get your dividends. And if you don't spend that dividend, you can actually reinvest that dividend, and then you can grow your capital sum, and then you're going to get a yield on a bigger amount the following year.
So it sounds so easy for you to say that. But for the women who have been working all their life in corporate, and then suddenly they decide, okay, I want to do something new. I want to start investing some of my money. they probably had a financial advisor which you don't like, who were probably advising them from the bank's side, or maybe insurance, or I don't know what else, because I experienced that. It's not so easy when someone just says, "Oh, go buy an index fund or go buy some ETFs." For the first timers who hear this, it's like, okay, that sounds like a great idea, but where do I buy this? How do I go about doing it? I know you can go to the bank, and obviously I went to Maybank, but it was a lot of documents. Until now, it's taking days for them to process this thing. Is there a faster way of doing it?
There is, but even before you go to the whole index fund thing, I think people should consider the fact that you can actually put up to 100% or 100,000 ringgit in any given year to your EPF, right? And your EPF is very good. You know why? Because you've really got a little lump sum inside there, right? And if you're able to put another 100,000 inside there, suddenly you're gonna get a yield on that bigger sum, right? So let's just say, for example, you got 300,000 ringgit in there. You put 100,000 ringgit there, you got 400,000 ringgit, right? You're going to get 5.5% on 400,000 ringgit, which is quite a lot. Actually, it's about 20,000 ringgit, you know. So that's quite a lot, right? And if you don't use that 20,000 next year, it's gonna compound on 420,000 ringgit, and then 5.5% of 420,000 ringgit, and then you know, Warren Buffett calls compound interest the eighth wonder of the world, right? But you're going to spend that 20,000, so you just use that. So the EPF is the first thing I think a lot of people can do. Then the second thing you can do is you can also go to ASB or ASN, right? If you're Bumiputra, you put into PNB ASB, and I think the yield there is about 6.5%, roughly, the last few years. And if you're non-Bumi, you can put it in ASN, and ASN is around about 4.5%. So that's not bad, right? Inflation officially is about 4%.
What is ASN?
Amanah Saham National. It's like a unit trust.
Okay.
So ASB is Amanah Saham Bumiputra and Amanah Saham National. So the Bumiputras will get the ASB and the non-Bumis will get the ASN, right?
And I mean, where do they do this? They walk over and go to the office?
That one I don't know, because I've never done ASN. Okay. But I think you can actually do it through your Maybank to you. You can just do it from there.
Oh, wow.
So
Okay.
I mean, touch and go, you can do it from there. So you're touch and go.
So it's made even easier.
It's very simple.
Okay.
Yeah. So you can put a little bit in there, put a little bit into EPF, and then, you know, obviously you can also put into other instruments. But I would also caution, right? I mean, what's your risk profile?
Yeah.
How much risk do you want to take on? If you're 50 years old and you're a little bit older in life and you don't want to take so much risk, and volatility gives you a heart attack.
This is exactly the group of people that's
Yeah.
around us, right?
Yeah.
They have the money, they want it to grow, but then they also need that for their retirement. So they don't want to really put it in a place where it's too risky.
Yeah.
But then they want to put it somewhere where it's going to grow beyond the typical, I don't know, fixed deposit rates, or maybe beyond EPF rates. So that's why those people will be looking for something like this.
Yeah, so I mean, first of all, obviously cut all your expenses,
Yeah.
cut all your credit card debts, right? Try and get to a position where your outgoings every month is limited. And then, I mean, just to go back to that first point, right? Look at the lifestyle, right?
Good.
You know, because if you've been working
So do you drink all these nice lattes? And,
okay, I look at financial matters very differently, right? I try not to think too much. I do, but I also think about I think about cost management, but I also think about top line, and I'm always looking for top line, new income streams, new rates of return, looking for alpha different ways, and getting better returns also. So where possible, I will be able to cut my lifestyle because I don't really like. I'm not really into all those fancy things. So it doesn't matter if I don't do it, but I do like a nice whiskey. I do like a good holiday.
so he doesn't drink
Do you know what I mean?
the latte or matcha latte that I take, but he takes whiskey and other things.
Yeah, so I like to be able to have the autonomy to make, you know, good. I mean, you know, I don't want to think about going to a restaurant and looking at on the right side of the menu. You know,
Yeah.
this is a luxury to have.
Yes.
So
And I think that luxury is for people who are, I think, around this age, right? So
Yeah.
of course, when we were much younger, it's always cautious, you're looking at the price and,
Yeah.
and all that.
No, but because I'm from Penang, I still look at the right side. And I mean, everybody does it, right?
yeah, I mean, I'm guilty. Chinese,
Yeah.
Chinese people
Yeah, yeah,
are
Chinese.
very concerned,
Yeah.
cost concerns.
Yeah. So I'm constantly looking at the markets and looking at ways to make money. So the thing is, first of all, cut expenses. Second of all, cut lifestyle, right? And then the third thing is think of ways to to do something which gives you an income. But if you're a little bit older in life, something that you enjoy, you know?
Yeah. If you can make
If
money
you,
out of something you enjoy, I
yeah,
think that's magic. That
yeah,
is magic. Because not everybody gets to make money out of things that they are passionate about or they love doing. And the most important is, does it add value to other people? I think if it adds value at the beginning, even if you didn't charge a lot or you gave it for free, later on, when people see the value, that's when the money comes in. But not everyone goes on that path very easily. Sometimes it takes years before you discover what you want to do. So
yeah,
while those years are happening, like for me, I still want to know, where should I be putting my money. Sometimes I'm worried I'm not doing enough in terms of financial planning or optimizing, finances. And that's why today, when we see the other women and they all say, I'm in this, and funny enough, I keep meeting them and they're all at this stage. Maybe it's the world is changing very fast and we have more information than ever, and they're making these decisions more than before, because back then people were less risky. Older people were probably sticking to their stuff much longer than now. And of course, the young people today, my gosh, they are changed. I don't think they were the same group of people just like our age back then, because now they have information faster. They've got AI. They are, some of them opt not to finish school, and they start to see tech billionaires who never finished school. So it's starting to change. And so if it affected the young people, I think it's affecting the old people as well. Older generation is starting to rethink, maybe I don't wait until I'm too old to change. And
yeah.
so I'm seeing them make the changes now.
Yeah, I've got some stories, right? I went to India recently on a motorcycle trip, and one of the guys on my trip, the day before he left to left KL for the trip with me to New Delhi, he sent in his resignation letter, and he's been working for the last, same as me, about 25, 30 years, right? But he's been working for someone. He's been working in banks and corporates, and basically I said to him, mate, what'd you do it, right? I've been egging him to resign for
Yeah.
years and years, right? And I said, what made you do it? And he says, look, enough of working for the man. And people get fed up, right? After a while in the corporate world, you know that a lot of it is just what it is, right?
Yeah.
And so he said, enough of it, lah. And last night I was having dinner with another friend of mine, right? And he was talking about this particular guy in his group, his classmates from 30 years ago, right? And all of them are taking care of their health. One particular guy is on what they call the carnivore diet, right? He only eats grass-fed beef
Yes.
every day of the week, no vegetables, okay, no rice, no carbs, no vegetables, right?
Yeah.
He swears, but
Yeah.
according to my friend, he swears by it, right?
It's like a
So
keto.
it's a keto diet, yeah. Swears by it. Cooks in lard, puts butter, he goes great guns on the fats, but no vegetables, no rice. He said he's lost, he's no longer has high blood pressure, his diabetes is gone, he's lost 15 kg. He doesn't do any cardio. He just does strength, right? And he says he's never felt better. He's like 51 years old, right? And so I said to my friend, hey, is this guy rich? Because normally rich people
Yeah,
are the ones
yeah.
who do this thing.
Yeah.
No, he's very average. He's like not a rich guy, just a normal Joe, right?
Yeah.
And I'm like, and is it just this guy? But everybody in the group is like taking care of their health, they're exercising, they're eating right, but they all still drink like fish, lah. Okay.
Yeah.
But I see this everywhere, right? And so young people are doing the FOMO thing.
Yeah.
The old people are doing the FOMO thing. And I think it's because the world is so uncertain now. There's war here,
the
there's
war,
climate change
yes.
there, there's this and that. And okay lah, enough. Okay, I better live my life before I don't know how long. And as you say, right, everybody has this same unknown,
Yes.
which is to say, it's a timetable, right? It's a
Yes,
clock,
yes.
right? And so you got to make the most of it, right?
Yeah. And I think today we see more and more of this happening, and hopefully we can help these people out there as we discover more things that we will be covering in the future. And And personally, I hope it helps me, because these were the questions that, you navigate alone, and then you see all this information on social media, which you don't know who you can trust, whether it's buying crypto, or it's the stock market's going to crash tomorrow, but no, buy into this index fund. So it's really confusing out there, and how I wish I could follow someone that is trustworthy, that would cover it from an angle of my age, my perspective, my risk profile. I like you said, not there's no one size fits all, but there's some general things out there that you can throw out, and then for you to decide. And one thing that I really liked about what you shared with me earlier is that there's no shortcut. You need to go and understand why. I can watch all the videos I want. I can go to all the schools, all these financial schools that I want. But at the end of the day, I need to understand why I want to buy Bitcoin, why I want to try to buy an index fund, why I want to go to a bank to open this account and put this chunk of money in, and why I want to invest in this through this app, which is very short term, but then it's very fluid, it's easy, it's middle of the night, you kind of want to put a few $100s in. So it's important to understand, we always want the shortcut, like in any industry, right? Like if you talk about fitness, they always want to go to beauty centers and pay them a huge sum of money and say, make me get abs, right? Make me thinner, make me look better. But the truth is, there is no shortcut. We know that the science is, you gotta eat well, you sleep well, you gotta exercise, do what's right, and you'll get there without any fees upfront. But we all search for that shortcut, and same as me back then, I would search for that shortcut, the financial advisor, the bank who wants to offer this thing at the at a cost, but then they plan everything for you. They ask you a couple of questions, but at the end of the day, I'm back to the ground zero, where there's no shortcut. You gotta realize why you want to do this, how much money you want to put away, why do you think that company is worth putting money into. Again, it's really, you gotta do the homework.
Yeah. I've been a financial journalist for it's actually 30 years really, essentially, right? And I basically for that 30 years and about, I made 25 years of mistakes. Not mistakes, are generally quite a lot of bad decisions in that span, right? So let me share about some of those bad decisions. Some of the bad decisions I made was maybe to go too heavy into real estate. And real estate, for Asians,
For
right?
Malaysians
Especially
especially,
Malaysians,
yes.
right? So just a bit of data, right? I actually did some research on this field. Actually, the vast majority of Malaysians don't do any investment. Like literally, only maybe 10 to 15% of Malaysians have any investments outside of the statutory EPF and ASB and
Okay.
Tabung Haji, these kind of things, right? So without EPF, maybe only 10-15% of Malaysians have investments outside those vehicles. Of that 10-15%, 85% of those assets that they buy, real estate. Real estate. And the amount of Malaysians with actually stock market accounts, Malaysian Bursa Malaysia stock
Yep.
market accounts, is maybe 10%. And the skew towards in that age range is 45 and above, 45, 50, 60. Very few kids, or not kids, people
Younger.
at 25 to 35 to 45 have Bursa Malaysia share market accounts. And so the thing is, we love real estate, right? But the real truth is, in the last 15 years, real estate has gone nowhere. It's literally gone nowhere. Just last night I was talking to my friend, he lives in Monkera. He bought his unit for, I shouldn't say because it sounds elitist, but it's worth 3 million ringgit, right? So he bought it 6 years ago. Has it gone anywhere? No, it's not gone anywhere, right? And so of course you shouldn't use your own your own house as an investment, but I do because I've always seen it that way. But even for other assets, other real estate, it's gone nowhere, right? It might have worked 20 years ago. It did work 20 years ago, but the last 15 has gone nowhere. And so my mistake was I made too many. I bought too much real estate. Not to say I've got so many, but I had a couple, right? And I didn't believe in the share market, and that was my mistake because the share market.
But you were reporting this.
Exactly.
But you were reporting this.
Yeah, and the thing is, the mistake was, I saw the share market as too much of a place where there's a lot of scams,
Yeah.
syndicates.
Which I think a lot of people
Yeah.
out there, you were covering it near.
Yes.
And we were watching from very
Yes.
far.
I will go on record as saying this. I will stand by this. The equity market, which is the share market, is in fact, probably the most powerful place to accumulate wealth and to generate wealth in humankind, literally. Okay, without the whole realm of digital assets, right? That's a different story. But for the traditional financial market as an asset class, the share market is the most powerful place to make money. I'll give you an example. When I was in my late 20s, I wanted to buy shares in Microsoft. I didn't buy shares in Microsoft because too much paperwork, right? But if I put even 5,000 ringgit into Microsoft in those days, it would be worth 1.5 million today. It's gone 30 times higher, right? 30 times. And again, last night, Microsoft hit another all-time high. It's because they're in the right business. Share market is the most powerful. I didn't do enough of the share market. I only really got into it really meaningfully in the last 5 years after COVID. Can you imagine? And here's the other lesson, right? I was too cynical. I read too much negative narratives in the news, which made me think that it's the worst. Because I didn't have the context, right? So if I had put in money in 2009 after the financial crisis, that was the biggest era of money printing in history. 10 years of low interest rates. It's like zero interest rates. Zero interest rates is like kindling and fire to the share market, because when zero interest rates, risky assets go up. They go crazy, right? So they went from here to there in like 10 years. And I was not in the share market because I thought, oh, there's recessions everywhere. Governments are in trouble. Oh, we're all going to die.
Are we in the same situation now? Because interest rates are being cut in the US, right?
Yeah.
And we're seeing some boom from
Yeah.
NVIDIA and all
Yeah.
this. I do see some people on social talking about crypto, but crypto is also down.
Yeah.
But then they're saying that this correction may be coming. So this is very confusing for someone who's not very technical. You covered it for many years.
Yeah.
And then you came late in the game, which to me, I'm really late as well. And that
Yeah.
Montiara thing is the same. I bought a unit because I lived in there. Eventually, I moved to a bigger place. I kept it. And after 10 years,
It's gone nowhere, right?
it's gone nowhere.
Yeah.
Literally, if I took that money and did that share market thing that you talked about, and even in the businesses that I've invested, that probably went somewhere, but then it may have made more money if I did this way.
Yeah, yeah. just what a lot of people kill me for saying real estate is bad, right? Because people are so enamored by real estate. I think for me the lesson here is this, and again, to qualify, I'm not a financial advisor. I'm just a normal guy who has made a lot of decisions in
Yeah.
this world, right? And these are my learnings. So again, I'm not advising people to do the same thing, but this is what I learned, right? Real estate, even before you get into real estate, people should not be too emotional about their investment decisions. Sometimes people get so passionate and so emotionally invested that it affects their thinking. They think, oh, you must buy real estate because it's you live in it and you can touch it, and therefore you should never not have real estate. I think yes, it's true, but maybe as your home, yes. But to try and manage and multiply your income, maybe not, right? There's a lot of limitations to real estate. First of all, it's illiquid. It's very hard to sell.
Speaking about that, two of my friends,
Yeah.
girlfriends who have 2 units each
Yeah.
in different places, Swasana, Central, Bangsar, this and that, almost difficult. These are condominiums. I'm not talking about landed property. I'm talking about condominiums that are not in the prime area like Bangsar or Montiara. They have difficulty selling
Difficulty
it, even
selling.
at a loss.
Yeah, yeah. So first of all, the lack of liquidity is a very, very big thing for me. I like the fact that, okay, you can buy and sell shares, and within 3 days you get your money, right? It takes a long time to sell your property. The second thing is, if you want to use it for an investment vehicle, you've got to manage it you're going to manage your tenants. If you get the wrong tenant, you're in deep
Yeah.
trouble. The process of finding a tenant is also another exercise. The process of equipping your unit with furniture and with accessories, and then to manage it well is another. So there's multiple costs. There's time costs, there's financial costs, and then there's government taxes. You got to pay DBKL. You got to pay your cukai galian.
Yeah.
And then you got to deal with the interest on your loan. And then you got to chase your tenant when he doesn't pay, right? And then when he repairs, he just calls you, hey, my this is bust, my that is bust. You got to send a repairman there, and you got to pay the repairman. And then you got a management fee. The bigger the unit, the more
Yep.
expensive the management fee.
Yep.
The fancier the unit, the greater the rate of increase. And it's usually every 3 years, right? It's a 5 to 10%. So if you got a 1,000 square foot apartment with a 30 cent per square foot management fee, that's $300 a month, right? And in 3 years, they've got the right to raise it by 5 to 10%, which they do, of course,
Yes.
inflation, right? And so for most rentals, it's underwater. Your cost is here and your rental is there. So for those reasons, I'm not into property anymore.
Anymore, yes.
In fact, I just sold my property.
Crazy. I can't believe you sold your home.
Yeah, sold it. And I look at my spreadsheet now on my monthly costs. I love the fact that I'm paying so few. I sold my house, I sold my car. So
Yeah.
so 3 line items gone. And whatever money I make now, I've got more of it at my disposal. I love it, right? So, I mean, I also want a lifestyle change, right? I want to work less, I want to enjoy more, I want to do things which I enjoy, which is this, right?
Yeah.
And then to talk to people and learn about the financial markets and learn about multiplying your money. So it's all aligned. My life is aligned with this thing as well. We're going to make mistakes. Hopefully we make fewer mistakes.
This is exactly what I was hoping to see online, because I didn't know where to go and how to do it right. So for the last 10, 15 years, it's been either from the corporate space to running my own business, and every day was firefighting. If you said that investment, let's say for Malaysians, they like investing in real estate, but there are a lot of things to maintain. There are a lot of hidden costs. It's the same for business. You run a business thinking that let me make money faster than, let's say, an index fund. But at the end of the day, you think opening a cafe looks fancy. I can charge, expensive coffee, for example. I could make healthy meals that can fly off to more homes and offices because Grab is helping us with this business. But then at the end of the day, it's like that real estate that you said. There are things to maintain, things that break down. DBKL licenses, you need licenses for fire, they all need jabs. You need employees. There's theft that happens, wear and tear of equipment. And at the end of the day, when you say 18%, where can you get 18%? I'm telling you,
It's not possible,
it's
right? It's hard.
very difficult. Even running multi-million ringgit business, it is difficult to get 18% net profit, consistently again and again. So only by making all these mistakes and experiences on the last, I would say, more than a decade, it makes me think that if you didn't do that index fund and all that much earlier, but you did your investments on real estate, the same mistake. As an expat living in KL for this December, it's going to be 19 years. I bought 2 properties. The one that I sold didn't make much, and it's a Mont Kiara real estate that was I would say, sought after. I can't tell you how many calls I received just asking me to sell it. But even with that high demand, I didn't make much. And running businesses, yes, there were good years, there were a lot of bad years. And at the end of the day, I do believe that if I knew all this index fund much earlier, I would have made more money. So how I wish there was this information out there telling me that, are you running a business right now and you're 35 to 55? I know you're busy out there hustling every single day, but if you have some money put aside, make sure it's not sitting on a current account or even just a fixed deposit, because that is not enough for you. Go open this app or that app, or, assess your own. This is not financial advice. Assess your own funds that you put aside that you could risk. You want high risk, low risk, but you want better returns than a fixed deposit. If you're watching this, make sure that you guys do it. So I wish someone said that to me, and I'm like, oh my gosh, yeah, I've got this X number put aside. My fixed deposit just keeps renewing month to month or 6 months, every 6 months, and I didn't do anything about it. I've met my other friends who told me the same thing, but then I started to also discover, when I was aware of such things, then I met some of my friends who said, oh, you didn't know I had this eToro account, I've done this, I've done that. And you're like, how I wish you told me earlier. I said, yeah, but we never talked about this. So having that money friend is very important. And maybe this should be, you are my money friend. I know it's not financial advice, but it's discovering it as we go along.
Yeah. With this, I mean, okay, let's just not obviously not give him a free plug, but there's a lot of platforms out there you can sign up on, right? And all the world's asset classes at your disposal. You can buy gold, you can buy silver, you can buy palladium.
Yes.
So asset classes, right? There's precious metals, right? Or rather, there's commodities, right? And then there's things like properties, or rather, yeah, real estate, right? And then you got the bond market, and then you got the share markets, and then you got the crypto markets, and then it can be very, very complicated, you know. And so when I got on that platform years ago, I had a pipeline. I saw palladium, right? Palladium is 95% down on the year. I thought to myself, hey, no brainer, right? What goes down must come up. I put, I don't know, I can't remember, 300 ringgit is the palladium. It went down even more. And I lost all my 300 ringgit. What, because you don't know, right? You just take a punt. So I realized, right? Even 2 years ago, I lost my 300 ringgit. First rule of investing, don't lose your money. Second rule of investing, don't forget rule number one. I was an idiot, right? So I also make mistakes, right? But so I want to talk about the wins, right? And I used to think that when markets are crashing, when maximum fear was like the worst thing since whatever, right? That's the best time to buy. And again, this goes against your deepest inclinations because when markets are crashing, you think, oh my God, the world is ending, you know. And we've had multiple drawdowns, right? Even you send me stuff on Monday morning, you're like,
Yeah.
oh my God, things are tanking, right? Those are buy opportunities. So for me, my epiphany was during COVID, right? Um, I think March 2020, the Prime Minister Tan Sri Modi Yassin called total lockdown, right? And the whole world was on lockdown in March 2020,
Yes.
right? And then everything crashed. The Nasdaq crashed, S&P 500 crashed. Apple went from $130, they went to like $60 or something. I thought to myself, hey, Apple looks cheap. I go and buy a whole bunch of Apple. I put as much money as I could and bought as much Apple as I could find, right? Apple shares were like 60
I wish I
bucks.
knew you then.
Yeah, right? And then I had a little bit left over. I bought some Berkshire
Yeah.
Hathaway. I thought safe, right? Warren Buffett, Berkshire
Yes.
Hathaway, Apple, iPhone, safe,
Yeah.
safe, right?
Same. Yeah.
It was the best thing I did. In 5 years, that thing went. I shouldn't say, but it went places,
Yeah.
right? And then so the thing is, so the learnings for me, not too much real estate, got limitations. Share market very powerful. Drawdowns, time to buy, but buy quality, right? And there's thousands of companies in the world. Which one do you choose? You know, I think that's another decision people have to make. Do you still buy oil companies? Do you still buy manufacturing companies? Should you buy Malaysia only, right? I mean, my learnings is that I don't buy Malaysia anymore. Why? Right? It's there's no growth in Malaysia, right? It's a 35 million country, right? There's companies operating in markets which are global in nature, and they are growing at rates which are eye-watering. I'll give you an example, right? Nvidia.
Yeah.
Nvidia, 2 years ago, people were saying it was too expensive. It was at 2.5 trillion market cap, right? Oh, it's so big, it's gone up so much, cannot buy anymore. Yesterday, it closed at $5 trillion market cap. It went double. That thing is growing at 25 to 30% every year, you know, because the demand is so great. It's a global demand, right? So
Yeah.
when you have a little drawdown, like when Trump called tariffs on the world in March this year, right?
Yes.
Everything crashed. Nvidia went from $170 to 88
Oh
bucks,
yes.
right?
How I wish at that
Oh
time I
my
understood.
God, right? Today it's 210 bucks. So Nvidia has gone from at that time, I think 3 trillion market cap, 2.7 trillion market cap, to now it's 5 trillion market cap, right?
So, what do you tell people who always think it's too late? Because for you, you learned, in the last 5 years. For me, I'm learning now.
Yeah.
And it always feels like you're too late at somehow, right? Like you're too late. The price is too high. It's already, then you start to look at the chart. It's already kind of gone up and
Yeah.
you don't know how much further it's going to go. So, what would be your advice to people? Knowing that it's not financial advice, but it's about what can they do so that it doesn't feel like I'm too late in the game. And then we get paralyzed because you see the price and you're like Nvidia stock already went up. So now you're like, do I buy? Do I not buy? Do I wait for the
The
crash?
only way to properly gauge whether a company is worth buying, even though it's gone up a lot, is to look at the earnings. If the earnings history is good and it's got good prospects for the future and it's going to continue making those earnings, then the valuations will catch up to the earnings. So Nvidia could be worth $10 trillion in the future because maybe its future earnings are so strong. So it's not to say the trading. It's all about the future earnings, right?
Right.
If the trend growth of earnings is strong and continues to be strong in the future because of whatever developments in the world, then it's still a buy. So for me, it's a decision I'm trying to make. Oh my God, at 5 trillion market cap, do I still buy bloody Nvidia, right? And I want to buy Alphabet. I can't. It's another. It's crossed its all-time high, right? Apple is all-time high. I sold my Apple at $200. It's now $270, right?
Yeah, so
Fucking
so
hell, man.
that's very crippling, right? So,
So-
when you buy, do you even sell?
Okay.
Yeah.
So here's the nuance here, right? Shares. Okay, so I wouldn't buy Apple. Why? They don't have an AI play. The reason why Nvidia is growing so fast is that there's an AI play,
Yeah.
and they supply the stuff that makes AI work. So Nvidia is justifiable. Apple is going up because of sentiment. It's just allocation strategy.
Yeah.
But they don't have a future earnings growth like Nvidia does. It's not growing 30% a year. It's not. It's growing at low single digits. The biggest product is the iPhone, right? The nearest thing to AI in the iPhone is Siri. And Siri is rubbish.
Yeah, I mean, I'm an Apple fan, but this is the only year that I didn't upgrade because it's
They
just
look the same now, right? 17 to 16,
yes,
15 to 14.
yes. It
When
didn't
16 came out, I bought 14 because 14 and 16 were so near.
yeah.
Right?
So the innovation, there's the lack of
It's
innovation.
So again, right? Should you buy? Should you have bought Apple?
Different reasons.
Yeah.
I still bought after.
No, sorry, the shares, the
yeah,
shares.
I bought the shares.
Yeah.
I bought the shares only because I love the brand, right?
Yeah.
The ecosystem around inside my home, MacBook, Apple TV. I believe that there are users like us who really love it, and once you're hooked, you're inside the ecosystem. The revenue streams would be iCloud. You know, they have
Yeah.
the advertising, they have the apps, and all
Yeah.
that. But will they jump to that Nvidia? Maybe not, because they don't have that AI play. So all of this were very foreign to me. You know it because I'm a user, but not from an investment perspective. And I wish more women out there would know about this because it's very enlightening once you know. So just coming back from Bali, I saw all the news, the social media were all buzzing about how Nvidia is going to be announcing the next plans. I think the earnings
partnerships,
report, the
yeah.
partnerships are about to. So, and that was before the October 28th. So on that evening, I'm like, okay, I don't know how this is gonna go, but let me go and click and try to buy a just small amount, and it really went up. So it feels great that I understood it enough in time. I know that the price is already all sky high. It's sky high already, but the worst thing is never starting. And I've lost a few, on Bitcoin because now it has gone down. But seeing all the news in terms of adoption of, companies, countries talking about cryptocurrency being the future of money, there's no doubt it's going to get there. It's just how long it's going to get there. So holding on to that, again, not financial advice, but without meeting you, most of the people who are in my group, they still think it's a scam. They still think, what is Trump trying to do? Is he trying to erase USA's debt for using digital currency? There are a lot of questions, and I couldn't answer any of them. But just by watching the fact that countries are all creating solutions around it, even Visa is already talking about adoption of whether Bitcoin adoption in terms of the payment. I think that is the future. It's just I don't know how long. So keeping it for the long term.
Yeah, so when it comes to trying to choose an asset to buy, right, it's always about the future. It's always about whether that asset is going to be more useful in the future, whether the company's products are going to be more useful in the future, and will people still buy those things. It's actually very simple, right? Investing in the right assets is all about adoption, about usage, and if people buy or use that stuff more in the future, well, then that stuff has got a good chance, right? So then I look at things like, say, Malaysia, right? It could be furniture manufacturers, it could be oil and gas companies, it could be rubber glove, right? Or it could be banks, right? So those companies, especially the good ones, like say a Maybank, for example, I will put in the same categories like an Apple. They're still really strong franchises. People still gravitate to the brand, but they won't have the growth characteristics of an Nvidia. People will still buy them stock, but it'll become more like a dividend play, where you're going to get a safe, reliable dividend every year, and they're going to have a lot of cash on the balance sheet. So maybe they give it back to you like a bonus or something, or like a split or something, right? Or like some capital management play in the future. But will they behave like a Tesla or like a Palantir or like an Nvidia or like even like TSMC, right? Or an Oracle. Those are all names which are pivoted to the
Yep.
future. And at some stage, for a little short while, Larry Ellison was the world's richest man, right?
Yep.
Because his shares literally doubled in one day.
Yeah.
Because they did something in AI, right?
Yes.
So that's the other thing about markets as well. Markets are also very narrative driven, right? Today is AI. In 3 years' time, what is it? So it's about spotting the trends, it's about spotting the narratives, getting in early, getting into the disruptors. In 3 years' time, Tesla could be nowhere. In 3 years' time, Bitcoin could be gone, right? So the thing is, not be too emotional about your investments. Spot the narratives, get into the quality ones early, and don't be afraid to get out. Don't be too emotional. Don't say, "Oh, that's the thing. It's so close to my heart. I cannot sell." No, be very cold about it. And the best example for me was my house. It's the
Oh,
house that
yes.
my kids grew up in. We've had it like 20 years, and then people say, "Hey, you're not sad to sell it elsewhere." I'm like, "No, it's time to go. Let's just sell it lah. Then I can take the money and put it elsewhere."
Yeah. So these are the crazy decisions that we do, as we get older, midlife, and we hope that this helps us find better meaning in terms of moving forward. I do think that social media, all these changes happening in the world, whether it's war, whether it's climate change, a lot of volcanic eruption happening back in the Philippines, it's really crazy times, and it makes you think that you want to live now. So yeah, we make these decisions that we normally don't make. And yes, we've made a lot of mistakes. I've made a lot of mistakes this year. But it doesn't stop you from trying again. So I hope that for other people who probably have done investments, and I do think that some people have lost money investing in the wrong, like scams, right? I've invested in that Triumph thing and it was a scam. It was a Triumph FX, it was a Forex kind of thing. So it shouldn't stop us from thinking there are legitimate places out there. And I hope that this is something we could cover, so that whatever we put out there, it's not a sure win in terms of making money, because investment is very personalized, but it's the right vehicle. So what would be one way that you can spot that these are the right vehicles, that they won't run away with your money, or at least it's a sort of safe space? I
Okay.
mean, with the SC regulation be one of the first.
Yeah, okay. Well, for me, one easy way to spot something which is not palatable is the promised rates of return. If someone says, "Oh, I can give you 15% a year, 20% a year,"
Oh,
it's forget about it. There's no such thing, right? There's no such thing. So a lot of these institutions that want to scam you, they say,
Yeah.
"Oh, invest with me. You get this rate of return." It could be 8 to 10%. 8 to 10% is actually a lot. It's reserved for the ultra high net worth. 10-15% is like unbelievable. 20%, 30%, forget about it. It's a scam, right? If it's too good to be true, it's not true, right?
but it still happens every single
Right.
day. It's
Because people are facing financial difficulties, they need to get away out of the rut, right? But if you can, use your common sense. If it's too good to be true, it's not true, right? The second thing is, and this works for me after so many years in the markets, right? It works for me. First of all, it's the source of your information. Who are you listening to? What are you reading? Because on social media, there's so many influencers.
Yeah.
There's so many agendas. You don't know who's being paid to say anything nowadays, right? So you got to find the right people to listen to. And for me, after years and years in the markets, I kind of have this nose for finding credible people. And I look at the background, I look at their working experience, I listen to what they say, I look at the data points they use, I look at the reports they put out, I look at the things they recommend. And if it aligns with what I understand about markets, and what I know about the macro developments, where the world is going and where central banks are putting their policies and where investments are going, and then also my gut feel, if those 4 or 5 things align in generally the same direction, then I will go there, right? And some of these things are quite contrarian, you know. For example, a lot of people might say, oh, don't buy Bitcoin, it's a scam, this and that. But from what I know and from what I understand and from what I've read and see what's happening, the tea leaves ahead, you have no choice but to be in this thing, you know.
But
You have no
that's
choice.
you who kind of read up and really follow these kind of markets and information. To the common people out there who don't understand all of this, who may not be following or who may not know, they don't know who to follow, right? There's just, I mean, I've started following all these kind of news, and once you follow one, all the crazy stuff pops up, right? So you don't know who to trust.
Yeah.
Do you think that one way would be, okay, SE regulated is the first one. At least you know you're trading in a platform that's safe. Other than that,
So SE regulation, or rather regulated companies, regulated assets, is a kind of like a safety mechanism, right? So if you, for example, would do some crypto transactions, for example, and you do it on an unregulated exchange, well, you run the risk of that exchange doing something with your tokens, or closing down, or whatever, right? So you don't want to do that. For me, I only trade on regulated exchanges. What's another one? To find out people to follow, well, generally, I don't listen to people who are younger a little bit, because you haven't gone through that many recessions. You haven't gone through that many cycles, right? You haven't felt the pain of having your capital wiped out, right? And a lot of these guys, some of them are quite good, but I don't know where they got their information from. So I generally tend to follow people who are my age or older, who have been through 3 or 4 or 5 cycles, who have worked at the big institutions, Morgan Stanley, Goldman Sachs. They've been hedge fund traders, you know. And when I listen to them speak, the way they talk and the context that they have, I know that they know what they're saying, because they have those data points. They have that nuance, that context. When I listen to a younger guy, and I listen to what that person is saying, you see, reading off a Grok AI or ChatGPT script behind his camera, it sounds like it, you know. And what are they recommending? What are they saying? If they're selling me some unknown token from some unknown project, why? Because what is the adoption curve? What is the user base? What does the project say? They don't talk about the white paper. They just talk about how much money you can make in the future, or how much is going to go up. There's no substance there, you know. So let's just be very clear. When it comes to digital assets, 99.999% of them are going to go to zero. There's only literally on one single hand the number of tokens you should buy, and those are the ones that are going to last. Those are the Microsofts and the Alphabets and the Googles or the Apples of the future. So I look at the digital asset space as the early 2000s, right?
yeah.
Right? In the early 2000s, Amazon was losing money every quarter, right? And people were saying to Jeff Bezos, oh my God, when are you going to go out of business, right? Amazon was like, 10, 20 billion market cap, right? Today they are, I don't know, 2.9 trillion, 2.7 trillion? That's like a 3,000x, since then. It's crazy, right?
Yes.
So I look at some of these names today, and they're doing amazing things, right? Whether it's Ethereum or Bitcoin. And they are literally the
future.
The future,
Yeah.
you know? But Ethereum is not small anymore. Ethereum is 300 billion market cap, right? For it to go to 3 trillion, which is where Amazon is now, it's not entirely impossible. Why not, right? That's a 4,000 coin. How much is Ethereum now? 4,000? It
Yep.
could be 40,000 in 10 years' time. I don't know. The world is different, right? Everything in the financial markets runs on Ethereum now. It's a layer 1, right? And then you've got the Ethereum competitor, which is Solana, right? And Solana is faster, it's cheaper, is better on all metrics. And in the DeFi world, Solana is number 1. Solana is a 95 billion market cap now. Can they be 1 trillion in the future? I don't see why not, right? It's very volatile.
Yeah.
So you're going to have the stomach for it, right? But those would be the names, right? The Bitcoins, the Ethereums, the Solanas. Everything else, forget about it, man. You know? And
Yeah.
those are punt.
I followed some of them and ended up buying the wrong ones, but okay, these are the top 3. Okay.
I mean, I'm not recommending them,
Yeah,
right?
yeah. I mean, this is what you bought.
Yeah.
Which I bought as well.
Yeah.
But
So yeah, so I mean, it's a process, right?
Yeah.
So at this age now, I'm in my mid-50s. I made a lot of bad decisions. I realize, okay, this is what I shouldn't do. This is what I should do. These are my rule. And hopefully over time, we share these principles with you.
Yeah.
I'm not saying you follow them, right? I'm just saying this is my experience. It's like this is how I do it. This is my template. It doesn't work for you, fine. But maybe you can use what I say to then springboard off and go off on your own thought process. But that's the key thing, to have your own thought process.
Having your own thought process is important, but I do think that listening to more people's mistakes,
Yeah.
this is where a lot of people can learn. And most of the time, we don't want to talk about our mistakes online, right? It's very painful. It's like repeating the pain all over again. But perhaps by interviewing more people and sharing about our own mistakes and own journey, this hopefully helps other people out there who's around our age, trying to discover what's next, what to do with their money, or they're finding meaning in life. And that's what we hope to cover here at Do More.
Cool. Well, listen to us hopefully, and do the usual: share, like, subscribe, etc. Comments. Tell us what you think.
Yeah, we hope to do more. We hope to help you do more with your life.
Cool. Thank you.